This morning on BRN Sunday, what you need to know when buying long-term care insurance. Joining me now to help break it all down, Philip Snyder is with the Warner Companies. In full disclosure, he's also my dad. Dad, great to see you. Thanks for joining us on the program this morning.
Hi, Jeff. How are you?
I'm doing okay. A topic that I wanted to broach with you, and I think I've been reading a lot in the news media as I prepare the Morning Pulse about long-term care insurance. And I guess my first question is to you, how do I go about buying long-term care insurance for myself and other members of my family?
How do you buy? Okay. You need to find someone who is knowledgeable and who you feel you can trust to give you good advice. And maybe you get those recommendations if you don't have anyone in mind from friends whom you respect who've had good experiences. And if you still don't have enough confidence, then maybe you get two people to help you. And then
And,
you weigh one against the other.
yeah, and is it a financial advisor? What type of insurance broker? What type of professional should I be looking for? I mean, obviously, I have you, so I could always go to you, but not everyone has Phil Snyder to go to. So, what type of professional would I seek out?
Well, I mean, it's an insurance product. Okay, so you have to be licensed not only to sell insurance in the given jurisdiction, state or whatever, you have to be licensed to sell long-term care insurance. Not that the licensing is that difficult, but you still need to hold that second license to sell the product. So that maybe narrows down the field. But the process is a bit of an investigatory process from the standpoint of what's suitable for you and what's not. So if someone's in a hurry to sell you something very quickly, they're probably not asking you enough questions and getting enough information. So
So let's to that end, let's talk about suitability. And I want to come back to the different types of products that are available, but let's talk about how you take someone. I'm 52 years old, as you know, but the audience may not. How do I figure out what I and my wife Jody would need in terms of long-term care?
well, first of all, you have to evaluate your current financial circumstances. You have to look at your family history. Not that that's necessarily an automatic dictate as to what may happen to you, but and so on. So you have to look at what assets you have, and then you have to evaluate, well, what may be my need downstream, and then marry up the two. Um, you don't have to buy 100% long-term care insurance to fund a benefit if you have money on your own that you can allocate towards that. So it's just a question of sitting down and going through your finances and your financial planning. Um, if you're going to buy it, what's the best way to buy it? What's the best product to buy? I know we're going to come to that. So it's a bit of it's a conversation or two, and to gain a clear understanding of what your exposure could be. Perhaps you're willing to self-insure a portion of that.
But
But you may want to cede some of that to an insurance company.
but this isn't just for wealthy people, right? I mean, long-term care. I had the feeling that all of us, in some way, shape, or form, at some point in our life, presumably at the end, will need some level of long-term care. So what we're talking about today really appeals to everyone.
Potentially, there's always going to be people out there who don't see it for one reason. It's not going to happen to me, or I have so much money that it doesn't matter. But there's a whole host of people in between who, with good counseling, maybe should take a good look at some sort of product that fills some potential holes, or cede some of that potential liability to an insurance company.
So what types of services, just just name a few, would I be looking for in terms of long-term care? So what types of services can I get through a long-term care insurance product?
Well, the best products will provide coverage for care in any setting. As long as your expenses are qualifying expenses, you can derive a benefit regardless of the setting in which you receive care. Nursing home, assisted living facility, um, uh, uh, community-based center,
Sure.
at home, whatever the case may be, it doesn't matter what the setting is. It only matters that you've incurred qualifying expenses.
And who qualifies those expenses? Is it qualified under the Internal Revenue Service? Is it qualified? Who deems that to be qualified?
Well, qualified product, first of all, it's in the Internal Revenue Code that defines what is a qualified product. But by and large, if you are unable to do 2 of 6, what they call activities of daily living, these are not medical maintenance. These are just functionality things: bathing, dressing, continence, toileting, transferring. I have all this here because I always leave one out.
Yeah.
Eating, most important
Yeah,
one.
it's pretty important to be able to
Yeah.
eat.
So if you need assistance with 2 or more of those, then those are qualifying expenses. You also need a plan of care. Someone has to be managing your care at some point. So the insurance company is going to want some sort of statement, a care program, so that helps to qualify those expenses. And it's as simple as that. But again, these are not medical expenses.
Right. So the medical will probably be covered under Medicare or some other,
Medicare,
or
um,
Medicare Advantage or some
or
other.
regular health insurance, premium
Right.
care, employer provided health insurance as an example.
So, Dad, let's talk about the different vehicles. I know when we've had you in the past, we've talked about life insurance products. I'll break them into term life and whole life. I know there's a lot more differences and subcategories. What products exist in the long-term care realm to provide the services we're talking about this morning?
Well, if we're talking about products that are purchasable by an
Yeah.
individual, or for a small group of individuals through a company, effectively non-group products, then the products are an individual long-term care policy. No other benefits. If you have a claim, you collect money, otherwise the policy's worthless. There are still some of those being sold today, but the number of carriers is severely diminished. There aren't that many still selling it. Doesn't mean it's bad. It just means it's not as popular as it once was. Then you could buy a life insurance policy, and to that, a permanent life insurance policy, which means it builds cash value. It's designed to run for your whole of life and so forth. And you can add what we call a rider. And
Yeah.
that rider allows you to access a predetermined maximum percentage of the policy face amount when and if you incur qualifying long-term care expenses. So if you have a $500,000 policy and you have a 2% benefit, that's going to be a monthly benefit of up to $10,000 a month for a maximum of 50 months. Every
And
time you take 10,000 out, you diminish the death benefit by that same 10,000.
I mean
That's
that
dental, but excuse me, but that's more a life insurance solution than it would be a long-term care insurance solution. The flip side of that is you can buy what's called an asset-based long-term care policy. You buy a very small life insurance policy primarily to recover the premiums at death if in fact you haven't used long-term care benefits that exceed the death benefit. There'll be some portion paid at death, so there's no cost other than foregone earnings on the premiums at death. But then you can add very robust long-term care benefits to that. With cost of living adjustments, you can determine the period over which you want to pay premiums. That product is nice because everything in it is fully guaranteed. There are no variables. So once you buy it and it's approved, it's in place and nothing can change it other than you wanting to make a change as the policy owner.
Let's kind of close out. I know with estate plans and wills, those are things that can change over time. Can I come back, say I buy a policy today for myself and my wife, 5-10 years, circumstances change. Can I revisit the policy and therefore either, I guess, upgrade or buy a different type of product?
Well, you have to add to it. You can't amend that policy. Well, you could. I'll take it back. You'd really probably need to buy an additional policy. That's why someone your age, for example, would clearly buy a policy with a COLA, a cost of living adjustment.
Right.
And typically those are 3% simple interest, 3% or 5% compound interest. So if you have a 5% compound interest policy every 14 plus years, your benefit's going to double. So
Yeah.
if you're not likely to use it for 30 years, or maybe never, but most likely 30 years downstream at your current age, you'd have 4 times the initial benefit when and if you needed to use it.
Yeah. Well, I mean, look, it's certainly important. I think that anecdotally, I think this is an overlooked benefit. And given that we're an aging America, an aging society, more and more of us are going to need these products. Dad, we're going to have to leave it there. But guess what? We're going to invite you back on the program again very soon. Thanks for joining us, and we'll talk to you soon.
Another invitation. Okay, great, Jeff. I hope everything works out. Happy to come back if need be. All right, take care. Bye-bye.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.